Can British banks survive another crisis? That's what new stress tests being implemented by the Bank of England are designed to decide. With me now to talk about the impact of the test is James Barty, Strategy Director from the British Bankers Association. Well, James, surely these tests are merely for show to gain confidence in the market?
These are very real tests. The extent of the economic shocks that are implied in the Bank of England's test are such that they're definitely not for show. They are, to have unemployment going up to 12%, to have the housing market drop by 35%, to have the worst GDP performance over 10 years and over 100 years. Well, they're pretty significant shocks. So if the banks can survive those kind of shocks intact, then I think they can pretty much survive anything.
Why then just target the 8 largest banks and building societies? Why not industry-wide?
They're the ones that we should be concerned about if they become vulnerable. And secondly, there's an element of you want to focus on the banks that have got the resources to be able to produce this.
What sort of scenarios are depicted in the test and how will they gauge the bank's ability to cope?
Well, we're looking at a pretty extreme scenario. 35% drop in house prices, 30% drop in commercial real estate, unemployment back to a level that we've not seen in 30 years, GDP growth to a point we've not seen in 100 years. It's almost a 1 in 100 year stress test is the way I'd look at it. So we're asking the banks to say, can you withstand a very, very extreme economic scenario?
So that's really a worst case scenario?
Yes, and I think the Bank of England would say, this is a kind of scenario which we very much hope doesn't happen. It's very much in the tail of any type of scenario that we can imagine. But we want to be sure that the banks can survive it, and also to see how the banks would perform in such a scenario. So for the Bank of England, part of what they're going to be looking for is what does it actually reveal about the state of the bank's positions and the state of the bank's books.
Stress tests have been demanded by the media and politicians since the 2008 crisis, but they were found to be too lenient. For example, Ireland's banks passed the test and then ran out of capital. So will these new tests be more stringent?
I think these tests are much more stringent, and I certainly think the Bank of England has learnt some of those lessons, and to say, well, actually, we want to put in place a scenario here which is really going to stress the banks, and we really understand how much capacity they've got for absorbing these type of losses. And even the European Banking Association stress test, which is less extreme than the Bank of England's, is starting to look at like a much more serious stress test than perhaps some of those early ones were.
So what was wrong with the earlier tests?
Part of the problem with the early stress tests is you were trying to stress test something in the middle of a financial crisis, and no one quite knew what the next domino to fall in the financial crisis was. Whereas here what we're saying is we've learnt the lessons from the financial crisis. We know that some of the things that can happen can be really quite extreme. So let's build a scenario which is going to properly stress the banks. And we're now in a scenario where we're sort of 5-6 years post the financial crisis. The banks are beginning to rebuild themselves. So if we apply that type of stress test, we can really find out how much progress they've made.
How do these tests compare to the EU tests?
The UK's got a bigger housing market. We're more exposed to variable rates of interest, therefore more vulnerable to this kind of correction, and I think they felt that they should go for a slightly more extreme stress test on that basis. So it's more aggressive, and I think that there's reasonable grounds for saying actually, perhaps you should be more aggressive.
The Royal Bank of Scotland is still recovering after its bailout, so surely this will not show the most accurate of results.
All the banks are in various stages of recovery from the financial crisis, and what you're trying to do in this situation is, so how much better have they got? How much more resolute are the banks now? So I don't think it matters whether you'll just recover from the crisis or whether you pretty much finished that recovery from the crisis. It's a question of how can you withstand these shocks now? And the regulators will be looking at all the banks and just saying, well, actually, where are you? What more do you need to do? Let's have a discussion about where you need to go in terms of continuing to build your capital and continue to become a safer bank.
Well then, do you think this could potentially spell the end for banks that are currently not performing well?
I don't think what the Bank of England or the European Banking Association are trying to do is to say, well, this is the end for any particular bank. What they're trying to say is a particular bank might do slightly less well than another bank. Then they're going to sit down with them and say, right, given the outcome of this stress test, how are you going to proceed to continue to improve yourself?
Well, these tests come amid concerns of rising house prices and a London super bubble. So how will this affect the lending market?
What the Bank of England is doing with these stress tests is saying to the banks, look, this is what we're concerned about. This is what we think that you should be focused on. And certainly in terms of the house price declines we're looking at the moment in the UK, they're quite extreme. And also the Bank of England is assuming that The bigger house price declines will be in areas like the southeast and London, which have had the bigger house price rises. So in a way, it's saying to the banks, be aware that when you're lending into these markets, we are going to stress your books. So you need to be very, or more careful about how you lend into the more extended parts of the market.
Well, a lot has been done to bring back confidence in the UK banking sector. So how do you think banks will cope with these stress tests?
If I look at what some of the banks analysts who've written on these tests have said, generally they think the banks will come through okay. Some might well be asked by the Bank of England to continue to progress to build more capital. But I think we've made an enormous amount of progress in the last 5 or 6 years, and the banks are in much better position to withstand a stress test like this today than they would have been pre-crisis, that's for certain.
The US already conducts similar tests, and as a result, the Bank of America was forced to retake the tests because it was uncovered a banking error that dated back to 2007. So do you think this could uncover some skeletons in the UK banks?
The answer is whether you uncover skeletons or not is a big unknown. The Bank of England made it absolutely clear that part of the reason for these stress tests is to try and work out what are the potential vulnerabilities in any of the individual banks, how they might cope with them, and then to work with the banks to make sure that you address any problems you actually identify.
Well, finally, stress tests do, of course, differ between America, the EU and the UK. So where do you stand on universal stress tests, the same for everyone?
There are some arguments in favour of a certain degree of universality in some of the tests. And if you look at what the Bank of England and the EBA have done, the Bank of England really extended an EBA test, and some of the UK banks will be doing the EBA test as well. The best solution, which is you have a general shock to markets, which you assume across the regulators, and then you say, well, actually, how might this differ from my local market, which is what the Bank of England has done. And I think that's the right kind of compromise.
James, thank you.
Pleasure.